a huge bear on Tesla has come out and said why he believes that Tesla stock could potentially go down to $10 per share. This implies that he believes the stock price will go from currently around $200 per share all the way down to $10 per share in the future. Is this realistic? Is this possible? Let's discuss. So the analyst in question here, the one who made this bold claim, this bold statement, his name is Jonas, and TipRanks actually has some information on him here. Oh, and by the way, if you haven't heard of TipRanks, they're an awesome tool. I personally use it almost every single day. It's completely free to sign up. I have a link in the description down below. Check it out. You can follow pretty much any stock that you have in your portfolio or you're interested in purchasing. See what analysts think about them, see news on them. Tons of information on pretty much every single stock out there. So check that out. So here we can see Adam's performance, and over the last 2 years, he comes out to around a 15.5% return, which is not too bad, right? Well, if you look at the S&P 500 over the same time period, it's not great because the S&P 500 returned around 17.5%. So that means that Adam actually underperformed the market here. But in my opinion, that's fine because 2 years is a fairly short time span to make a judgment call on anyone's performance. So I'll give him that. But I mean, I just want to put things into perspective for you guys here and just show you what is public on his performance here. And I just want to show that this guy isn't necessarily a genius or anything. He's just a regular analyst out there based on these returns. Also, what I found very ironic here was that his biggest winner was, guess what? Tesla, which he made over 660% return on back in 2014. So he has been following this company for quite a while. Now, there's one other crucial point which I want to kind of touch upon and discuss further, but we'll save that for the end of the video because I first want to go over what he says here and what his claims are for the stock to potentially go down to $10. And I want to kind of give my thoughts on those, and then we'll kind of go full circle as to why I think this analyst may not necessarily be the best analyst here for Tesla stock and why his thesis or hypothesis may be very far off from the actual truth. So he starts off by saying that there's 3 major factors that determine Tesla's share price. The first is demand for its products, the second is cash flow generation or free cash flow, and the third is access to capital markets. And he believes that none of these factors have been particularly strong for Tesla as of late. Now the key word here is that he does say as of late, which shows that he is very short-term focused, and I guess that's expected really from any analyst because all they really care about is the short-term profits, the short-term gains, and the short-term outlook on any stock that they follow. Now elaborating on these points further, he says that here, quote, that this sharp deceleration in demand in this last year has led to a substantial curtailment of the company's ability to self-fund through free cash flow generation, at the margin potentially impacting the firm's access to capital. So let's address this for a second here. Sharp deceleration in demand. So this is yet another analyst that's looking at the quarter-over-quarter performance when the auto industry as a whole actually declined quarter-over-quarter. Guys, Q1 is typically a weak quarter for the auto industry, so we shouldn't be holding Tesla to just this one little metric here, saying that there were less cars sold in Q1 as opposed to Q4 of last year. And the funny thing is that he completely ignores the year-over-year performance, because if you look at the year-over-year performance here, you can see that Tesla grew more than 2 times from the same period last year. Conveniently though, he doesn't address this, and it supports his thesis better just to look at the quarter-over-quarter versus the year-over-year. Then he also addressed free cash flow in that statement as well. And yes, Tesla did suffer pretty bad in this last quarter. They did lose a lot of money, a lot more than I was expecting and pretty much everyone out there was expecting. So it is fair to kind of bash the stock a little bit because of that. But it isn't really fair to say that they're going to continue losing this much money moving forward. They had a lot of logistical issues or delivery issues in the last quarter, which they do plan to have ironed out for the next quarter and pretty much every quarter moving forward. So we should see substantially less losses. We should see a lot more healthier balance sheet, and eventually over the long term, we should see some good profits. But really, at this point, it's a waiting game. We've only had 1 quarter of really bad results recently, so we're gonna have to wait to see how that pans out for the rest of this year. Don't forget that the last 2 quarters of last year were actually profitable for the company. But you know, these analysts have amnesia. They don't really remember things from just a few months ago. They just like to focus on the right now. Now this next statement I just have to honestly laugh at, because he's pretty much assuming every single negative scenario that could play out here in Tesla. And he even addresses things like employee morale, which is one thing I guess bears do. They like to focus on any little thing that could potentially go wrong. Hey, but bulls are the same way, right? We like to focus on things that could potentially go right, so I'll give him that. But anyways, in this statement, he says that, quote, Tesla's recent 2.7 billion equity and convertible debt rise may provide an extra year of liquidity to run a business of this size and cash assumption. However, Tesla may now find itself in a cycle where a lower share price may itself contribute to a potential deceleration of employee morale, as well as potentially increased counterparty risk with both customers and business partners, potentially further impacting fundamentals. Notice how many assumptions there are in this statement. May provide an extra year of liquidity, may find itself in a cycle, potentially affect employee morale, and so on and so forth, just to make his point here. I mean, it's good to be aware, even as a bull in Tesla stock, to see the bearish thesis. But when you see assumptions like this, assumptions that aren't really necessarily related to the fundamental core of the business, things like employee morale, that doesn't necessarily directly affect the balance sheet, and analysts like this kind of lose a bit of credibility here because they're trying to pull any and everything that they can to support their thesis on the bearish case for Tesla. But to make statements like this cash can maybe last Tesla 1 year is a very bold claim, and I think an analyst like this should be held accountable for making a claim like that. Now I know it's going to be a year until we find out if it actually was true or not, but I do think that in a year we should readdress this. So I would kind of advise you guys that in the comment section down below, maybe set a reminder, let me know in a year. We'll come back to this and we'll see how this aged and we'll see if this analyst was right after all. A lot of these analysts out there just make bold claims. They just say that the stock's going to head to this price, going to head to this price. But when it comes down to it, they never stand behind that. And that's something that I think a lot of analysts should be held accountable for, because a lot of people do look at them for reference as to where the stock price is going to go. I mean, this guy's downgrade alone is what helped contribute Tesla moving under $200 per share recently. But on the flip side, chances are realistically a year from now, this analyst is probably going to reverse their target on Tesla. They're probably going to say, okay, you know what? They fixed all of their issues. You know, they're looking good now. Tesla's bullish, and I'm going to raise my price target to $300 per share. It's most likely what's going to happen because these analysts don't really stick to their guns. They make a thesis, they support it right now because that's the cool thing to do. You know, bash Tesla when it's down. Everyone's piling on this. So you don't want to be the one person that says, no, I am bullish on Tesla, because you're going to be looked down upon and kind of laughed at if you're a fund manager or an analyst or whatever that is amongst all your peers. So keep that in mind. These analysts kind of work together. If one downgrades, the other one wants to downgrade typically, and it's just kind of a cycle that goes on and on. But anyways, are these reasons that we talked about good enough to bring a stock and a company that pulls in over $20 billion in revenue to something like $10 per share, which would value them much less below what revenue they bring in? And not only that, is it fair to value this company so low when they're innovating on so many fronts and changing the world in so many ways? In my opinion, you have to be pretty narrow-minded to believe this, but that's just my opinion. Anyways, in Mr. Jonas's final statement here, which pretty much made me lose all credibility for him, he said that Tesla may have oversaturated the retail market for battery electric vehicles outside of China. You can't be serious. You can't be serious to think that EV demand has collapsed and that the market is saturated with people who want to buy electric vehicles. Do you really think that demand for electric vehicles has peaked? Well, in my opinion, I think this is absolutely false. And even most bears out there will agree with me on this, because one of the biggest bear theses is that the competition like Audi and other manufacturers are all working on electric cars to add to their fleet for the future. So if the electric market has saturated, why would all these manufacturers spend all of this money and R&D in developing these brand new electric cars just to compete with Tesla? Why wouldn't they just ignore Tesla and just continue selling gas cars because, you know, the market's saturated, it doesn't really matter anymore? And the answer is because these manufacturers recognize that electric vehicles or EVs are the future, and this is just the beginning of a new wave of types of automobiles. So to make a statement like the EV market is saturating is absolutely ridiculous, and when I read that statement, I pretty much lost all credibility for this analyst here. So clearly I do not believe in this analyst. I do not believe in what he says. I don't believe the points that he makes are valid, and I absolutely do not believe the Tesla stock will go down to $10 per share. But here's the interesting thing that I wanted to touch upon earlier, and kind of the crucial point that I wanted to make. So when I looked at this analyst's recent price targets on the stocks that he follows, I noticed a trend. He has stocks like Ferrari, General Motors, Harley Davidson, Fiat, Ford, all companies that are pure automobile players. And then you have a couple other companies at the bottom here like Avis and Hertz, which are two companies that rent out regular cars. So what I gather here is that he seemingly knows the auto industry well because he follows all the major manufacturers and rental agencies in the US. But what I also see is that he has very little knowledge on the technology side of things. This means when he came up with his price target on Tesla, he was valuing Tesla as a pure car company. He didn't look at the AI, he didn't look at Tesla's chip, he didn't look at self-driving, he didn't look at the insurance business Tesla is possibly entering, and he definitely did not look at the robo-taxi potential that Elon Musk and Tesla do plan to enter. All he did was look at the physical car, say, okay, EV demand is collapsing because if you look at Q1 numbers, it was less than Q4 numbers of last quarter, so that means that people are not buying EVs anymore, and that means that Tesla is dying. And my rebuttal to that, what I would say to that is 3 points really. The first is that Tesla is not just a car company. Tesla, in my opinion, is actually a technology company with a car as opposed to a car company with technology. And really you have to see the pure brilliance that Tesla has with their chip, which actually outperforms the NVIDIA chip, which is a pure tech company. So to be a company that manufactures these electric vehicles and also has developed probably the best self-driving chip in the world is not a small feat, and it's something that no other car manufacturer has even come close to yet. The second point I want to make is that lower demand in Q1 is not a trend. Just because you have one down quarter does not make it a trend. We'll have to wait and see how the next few quarters pan out, maybe the next year or so, and then we'll see how the trend actually pans out. And the third point I want to make is that profits should not be a concern for a company that's in 100% growth mode right now and expanding to worldwide markets. There are countless of examples of companies that have been unprofitable for many years and then eventually turn a profit and become very profitable. Of course, the most common is Amazon. So you look at Amazon, they were very unprofitable, but now they're a profit machine. So don't think that a company can't go from big losses to big profits over the long term, because that is 100% possible. And with all the segments that Tesla plans to enter and with all the technology that they have behind them, including the recent Maxwell acquisition, I think it is very possible Tesla could be one of the most profitable companies in the world in the future. But as always, guys, I'd love to hear what you think on this analyst and his thoughts, whether you think Tesla is actually headed to $10 per share or not. Let me know in the comment section down below. Like I said, I personally do not believe this will happen, but we'll have to wait and see how this pans out. If you enjoyed this video, make sure you check out this video as well right here. Drop a huge like, hit the subscribe button down below, and that bell notification so you don't miss any more videos just like this one. Thanks for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.